All right, let's dive into crypto trading today. Specifically, the strategies a trader named Nico is using. Bitcoin's almost at $94,000, Solana's hitting 240. Even Dogecoin saw that crazy spike after the election, you know?
Yeah, it's wild out there.
So we're going straight to Nico's latest podcast, his French one. He answers a listener question there about how his futures trading strategy is adapting, to crypto.
Oh, cool. Like we get to be flies on the wall.
Yeah. Total insider access, right?
Definitely.
One thing that really jumped out at me, he actually says crypto is easier to trade than futures right now.
Really? Huh. That's not what I would have expected.
Me neither. I always thought with all that volatility, it'd be way harder to predict anything.
Well, that's where it gets interesting. See, he's got this strategy. It's called market making. Uses tools like Quant Map and MTA Quant. Been doing this for futures, and he's finding it's even more effective with crypto. And the volatility is a big reason why, apparently. Before we go too deep on that, though, I got to ask, have you ever thought about trading crypto? What pops in your head when you hear that?
Honestly, super risky is the first thing that comes to mind.
Yeah, that's a common one for sure. And Nico, he tackles that head on. One of his big points is that, yeah, crypto is volatile. But there are ways to, manage that risk.
Okay, I'm listening. I got to know how.
All right, so he explains that with futures, you usually have to buy, like, a whole contract, which can be a huge investment. But crypto, you can trade tiny fractions of coins. Think 0.001 Bitcoin, stuff like that.
Ah, so you're not going all in on every single trade.
Exactly. Smaller moves, more calculated. Then there's leverage. I can really boost your wins or losses. Got to be careful. Some crypto exchanges offer leverage up to 125x. Think about that.
125x?
Yeah. Control a $125,000 position with only $1,000 down.
Whoa, that's powerful, but kind of scary too.
For sure. If you don't know what you're doing, it's playing with fire. That's why Nico, he keeps saying leverage is a tool, needs a really precise surgical approach.
Yeah.
And that brings us back to his market making thing.
All right, yeah, break that down for me. What is market making? In simple terms, like in crypto specifically, is it just the classic buy low, sell high?
It's a little more to it than that.
Yeah.
Basically, market makers, they're the ones providing liquidity. They put up both buy and sell orders close to the current price, and they make their profit from that little gap, the spread between the orders.
They're like always ready to deal no matter which way the market goes.
Exactly. Middlemen, yeah. But what makes Nico different is how he uses market making with real-time data analysis, all to find these things he calls traps.
Traps. Okay, now I'm really lost.
Okay, imagine this. A bunch of traders, they all jump into a trade thinking the price is going to skyrocket, and suddenly, boom, price drops. These traders, especially if they're using high leverage, they freak out, might have to sell at a loss just to avoid getting liquidated completely. And all that selling, it pushes the price down even further. Like a domino effect, that's a trap.
So Nico, he uses data to see these traps coming.
He's not just watching the price. No way. He's looking at all this real-time data, trying to get a feel for the market's mood, And to spot those moments where everyone's about to panic.
Like what kind of data? I'm curious now.
He mentioned open interest, liquidations, and funding rates, stuff that's easy to get in crypto, unlike futures or Forex. And here's the key. He gets it all through a WebSocket. That means it's constantly streaming, it's live. He's got a real-time pulse on the market.
So he's always got his finger on the pulse, knows what's happening right now.
Exactly. Which means he can react super fast, when one of those traps pops up.
Okay, starting to get it, but how does he actually use that data to decide what trades to make?
Well, let's say open interest is really high. Then suddenly there's a ton of liquidations. That's a red flag. Could mean a trap's forming. So he might place some strategic buy orders, figuring there's going to be a bounce back, once all those forced sellers are out of the picture.
So he's not just reacting to price, he's trying to understand what's causing the price to move.
Exactly.
Yeah.
And this is where his futures background really comes in handy. He gets how those traders think, how they behave, and he's using that knowledge to, anticipate their moves in crypto.
He's playing chess and everyone else is playing checkers, huh?
Pretty much. But even with all this fancy stuff, he still says risk management is super important. Constantly analyzing data, adjusting his positions, got to minimize risk.
So it's not just about being smart. It can be a discipline, too.
Absolutely. Can't just YOLO it. He even mentioned another layer of analysis he uses, calls it on-chain data. But he's saving that for another podcast. Guess we'll have to wait.
On-chain data. No idea what that is, honestly.
They're like diving into the blockchain itself, seeing what's going on under the hood. But let's stick with what we've got for now. We've covered a lot already.
We have. I'm starting to see how Nico's approach is different. It's not just buy low, sell high. There's a whole psychology to it.
Totally. And he's using data to, get an advantage over everyone else.
So before we started all this, you asked me if I ever pictured myself trading crypto, and to be honest, I kind of dismissed it. It always seemed more like, gambling than real investing.
Yeah, I get that. It's definitely not for everyone.
But what Nico's describing, it's like a whole other level of strategy. It's almost like he's figured out how to, beat the system or something.
He's found a way to work with the chaos, that's for sure.
Yeah, and the data analysis part, that's what really blew my mind. He's not going on gut feelings or following the hype. He's actually using data to make decisions.
He's like a scientist studying the market, trying to understand how it behaves. Remember when he mentioned using WebSockets to get that real-time data?
Yeah, I gotta admit, that part went over my head a little. What's the big deal about getting data through a WebSocket anyway?
Well, think of it this way. Imagine you're trying to track a hurricane. You wouldn't want to wait for a weather report every few hours. You want constant updates.
Right?
That's what WebSockets do. They give his tools those live updates.
Ah, so he's seeing the hurricane forming before anyone else even knows it's there.
Exactly. He's got that real-time pulse on the market. So he can react way faster, especially to those traps he was talking about.
Speaking of traps, I'm still kind of hazy on that. Got any real-world examples to help me understand?
Sure. Let's say Bitcoin suddenly spikes. Everyone's piling in, thinking it's going to the moon. But Nico sees that the open interest is crazy high, funding rates are going through the roof. That tells him things are getting overheated. A correction is probably coming.
Like a bubble about to burst, yeah.
Exactly. And when the price starts to dip, all those traders who bought in late, especially the ones using leverage, they start to panic. They have to sell, even at a loss. Creates even more selling pressure. The trap snaps shut.
And that's where Nico steps in, right?
He might place some buy orders at that lower price, knowing that the panic selling is creating an artificial dip. Once things calm down, he's bought Bitcoin at a discount.
Wow. That's pretty clever, using the fear of others to your advantage.
He's not exploiting anyone, just capitalizing on an opportunity, a market inefficiency.
But he still needs to be able to, read the data correctly, right?
Oh, absolutely. Remember those 3 key data points he mentioned? Open interest, liquidations, and funding rates. Open interest tells him how many people are in a particular trade.
So high open interest means a lot of people are betting on that asset.
Exactly. Then he looks at liquidations, which shows how many traders are getting forced out. Because they didn't have enough margin to cover their losses.
So a spike in liquidations could be a sign that things are about to change direction.
Right. And then there's funding rates.
Yeah.
That shows the sentiment of the leveraged traders, basically the cost of holding that leveraged position.
So high funding rates mean people are super bullish, willing to pay a premium to stay in the trade.
You got it. By putting those 3 pieces together, he gets a feel for the market's mood. And that helps him spot those potential turning points.
It's like a sentiment analysis tool, but instead of looking at tweets or news articles, he's looking at the actual money flow.
That's a great way to put it, yeah.
This is all super interesting, but I gotta ask, is this something the average person can even do? You need to be like a coding expert to set up WebSockets and analyze all this data.
It's definitely not as simple as clicking a button, that's for sure.
Yeah.
But there are tools and platforms out there that make it easier.
So you don't need a PhD in computer science to get started.
No, not all.
But you do need to be willing to learn, put in the time.
Absolutely. This isn't a passive thing. You got to be actively involved, studying the market, always refining your strategies.
Which brings us back to that mysterious on-chain data Nico mentioned.
Right. He didn't go into detail, but it sounds like it's a whole other level of analysis. Instead of looking at market data, he's looking directly at the blockchain itself.
The blockchain, that's the technology behind cryptocurrencies, right?
Exactly. It's like a giant public ledger, records every single transaction.
So instead of looking at the price of Bitcoin, you're looking at the actual movement of Bitcoin between wallets.
Precisely. It's like following the money trail, seeing where it's coming from, where it's going.
So it's like we get this backstage pass to the whole crypto world with on-chain data, not just watching the show. We're seeing how they put it all together, right?
Yeah, kind of like that. You get to peek behind the curtain.
It reminds me of those crime shows where they track the money to uncover a conspiracy.
Not a bad analogy. You could actually see stuff like big movements of cryptocurrency, what they call whale activity.
Oh, yeah. I've heard that term. So if like a whale, one of those big players,
Yeah.
moves a ton of Bitcoin between exchanges, that could mean something big's about to happen.
Could be a sign. Yeah, experienced traders definitely keep an eye on that.
Okay, so that's whale watching. What else can you see with this on-chain data?
Well, you can see how many active addresses there are on a blockchain. Gives you a sense of how much people are actually using the network.
So if there's a ton of new addresses popping up, maybe that means that coin's getting more popular.
Could be. You can also look at transaction fees, see how congested the network is. High fees usually mean there's a lot of demand.
It's crazy how much info is packed into the blockchain. But how do you even begin to understand it all? This sounds super complicated.
It definitely can be. There are companies building tools specifically to help with that, though. To visualize and interpret on-chain data.
So you don't need to be a blockchain whiz kid to use this stuff.
Nope, there are platforms that make it a lot more user-friendly.
That makes sense, but it still seems like there's a pretty steep learning curve.
There is no doubt, but there are also tons of resources out there if you want to learn.
I bet Nico's already mastered this stuff. He just mentioned it briefly in the podcast. But I have a feeling he's already using it to get ahead.
I wouldn't be surprised. He seems like he's always on the cutting edge.
Yeah, like he's playing 4D chess while we're still figuring out checkers. So what does this mean for the future of crypto trading? Will on-chain data become like the standard thing everyone uses?
Hard to say for sure, but it's definitely something to watch. As more traders realize how powerful it is, I think it'll become more and more essential.
It's mind-blowing that all this info is just out there waiting to be discovered.
Totally changes the game for investing and trading, doesn't it?
Well, there you have it. We started out feeling totally clueless about crypto trading. And now we're starting to get how someone like Nico uses data to find opportunities in this crazy, wild market.
He's not just writing the weights, he's predicting them.
And using this on-chain data to understand what's really going on.
It's a whole new world of analysis.
So the big question is on-chain data the future of crypto trading? Is this something every trader will need to know to stay ahead? What do you think? Something to think about as we wrap up our deep dive into Nico's strategies. Until next time, keep learning, keep exploring, and keep diving deep to